Hey everybody, this is Kevin with Leading Edge Financial Planning, and today we get to talk about FedEx pilots and our excitement around the fact that FedEx pilots finally have a new contract, Andy. What are your initial thoughts, Andy, from viewing everything? And I know we're not going to talk fully about the contract today. We're going to talk more about the retro bonus, the big sum of money that's coming to all of the
hmm
FedEx pilots. But any thoughts before we jump into that?
Yeah, first one is just congrats. It's been a long time coming for our FedEx pilots. I know lots of talk of contracts. You've watched all the legacy folks get their contracts, whether that be all the majors, Delta, Southwest, United. So just congratulations, and hopefully this is hopefully you're happy. The TA results, vote results implied that at least a vast majority were happy. And so, yeah, Kevin, we want to just tackle the closest alligator to the canoe. This thing is June 29th. So this APRP or this retro bonus is going to get paid, as soon as then, no later than September. So there's a lot to think about when you get a larger sum of money that maybe you weren't expecting. So we wanted to arm our FedEx pilots with just some things that we think about. And Kevin, we've seen this before, right? So we were helping pilots out when they got their retro bonus, right? United, Southwest, and so just things that we've seen during that time period that we think can help the
Yeah.
FedEx folks.
Yeah, and Andy, I'll tell you, the Southwest folks in particular got some really big retro bonuses, and I,
Yes.
I learned a lot during that time period. I think a lot of the people that have gotten the retro bonuses learned a lot. It's fantastic when you first think about getting this extra sum of money, but then there's multiple different mental accounting that goes on.
Yeah.
There's multiple different emotions that go on. Some people have pre-spent it all before it actually gets put into the paycheck, and then there's some taxes and other types of issues that come up whenever a retro bonus is paid. So really, what we'd like to do today, I think, Andy, is we're going to talk about the bonus. It's called the APRP. I probably just call
That's
it the
right.
bonus though, but
Bonus
maybe
is
it's
good.
easier for you to say APRP. But we're going to talk a little bit about that. We're going to talk about some of the emotional dynamics that we've seen before with some of our clients that have had these retro bonuses in the past. And I think there's some emotional gotchas here that we really want to go after because
Yeah.
you can look up the rest of the information, but the emotional gotchas I think are really important. And then finally, just financial planning 101, Andy.
Sure.
What could, we don't want to say should, we don't want to should, but what could
Yeah.
people do with that bonus? So yeah, Andy, I'm going to turn it
Let's
over to
jump in.
you if you want to jump into it. But is there anything else that you want to preface?
No, it's a great summary. We'll jump into all that. I think the last thing I'll say is, hard earned, right? Like this isn't a gift. Our FedEx pilots, you guys were on the line while you watched probably all your friends, flying for the other majors, making had a different contract, and so this is hard earned money, and that's how I would frame it, at least in my head, just kind of right off the bat, and well deserved.
Yeah, that's a great point, Andy. Well earned money is different than found money.
That's right. That's right. All right. I think we hit on this, Kevin. We're just going to talk mechanics. I'm sure, you've watched the road shows, you've watched the Q&As, you've read the LOA if you're a pilot, just kind of just at a real high level. We'll be pretty brief through that. Kevin hit the nail on the head. There's some emotional dynamics, then we'll jump into the financial planning. All right. Just things to think about, right? So this is, it's a one time, obviously, it's lump sum. And really what it's meant to compensate folks from 2021 through this effective date of the new TA, so June 29th of this year. And just like we said, right, all these other carriers were getting new contracts. There was a gap that was building as you went along from FedEx pay and those other contract pay. And so this is meant to compensate folks for those as well as take into an account an inflation component.
Yeah, Andy, I'll just say the 29th, June 29th or later, super important because you've already been paid half a year
Yeah,
in your job and gotten half the benefits. So that might be important, at least for captains and other high time FOs.
excellent. All right, who's active? Eligible, I should say active pilots, or if you're on the master seniority list here on June 29th, and then any portion of that amenable period again, November 21 through this June 29th. I'll call out the military folks here, right? If you're on mil leave, you're expect once you return to active status, right? So you're coming off long-term order, especially my guard and reservist friends out there. And then if you retired, deceased during this period, you'll get a payout there as well. Unfortunately, if you resigned, then during that time period or were terminated, you won't get the payment. But pretty liberal, I would say, in terms of who's eligible for this retro bonus.
Yeah, I don't think you need to call any of the pilots that have retired from FedEx. I'm sure they're going to hear about this, but maybe if somebody had passed away, I mean, that
Yeah,
really might be a great thing to contact the spouse, and probably they know
absolutely.
as well.
Yeah, good point. Good point. All right. So this is the per bid period rates. As we were looking at this and thinking about it, I know there's lots of consternation about just how these numbers were actually created. I don't have any intention of litigating that here, but I know there's been lots of talk of why wasn't it a percentage payout versus a fixed dollar amount, but just kind of reiterate that the MEC, your negotiators felt that this was the best way to get it across the table and to compensate again for that time, from November through this period.
Yeah, Andy, I'm often reminded when I see this kind of stuff of what my New Jersey friends always say, it is what it is. And so
Hmm.
it's really about the amount of money you're getting, and that's really, I think, the most important thing. But this is not optimal. It never is.
Yes, there are people who are going to be better off than if they would have been on a percentage method, and folks who are high time flyers, during these time periods who are going to be disadvantaged, obviously, by the fact that it's not a percentage of wages, right? But like I said, this is what the union and Alpha felt they could get across the table. Maybe this is worth spending a little bit of time, Kevin, right? And we already kind of mentioned it. So it's going to be paid to you as cash, right? So that means let's just call it the August, whenever, between now and September, essentially, you're going to get that paycheck's going to look a little bit bigger, right? And then things to think about, maybe not as big as you had thought it was going to be. We'll talk about reasons why that may be the case. This is, I think, important here. Retirement contributions. And I'll actually circle this one up here on the upper right. So pensionable, and it'll be a part of your FAE. So final average earnings for the pension calculations. We don't tend to get into options 1, 2, and 3 on this video. Certainly, we're diving deep into the TA and coming up with our perspective and things to think about on that. But either way you skin that cat, no matter what option you go, you're still going to retain some form of a pension. It will count towards that. And then at least now that 9% will go into that, subject to those IRS limits. Remember the 72,000, that's the 415C, and then the 401A 17 of the 360,000. So opportunity maybe to get a little bit more just from the company contribution. And then we'll talk about it in the planning side of the house, right, Kevin, of, hey, maybe this is an opportunity for you if you haven't met your contribution limits, 24,500, maybe some after-tax contributions, if you're looking to really juice the retirement savings and using this as an opportunity to do that. So we'll
Andy,
definitely want to take a look there. Yeah, go ahead, Kevin.
before you go on, so what happens if you have already met all of your 401k contributions? What will happen to that 9%?
So legacy does not have cash over cap. So that's
Okay.
not gonna spill back to you. So either you hit them or you didn't.
Okay.
Yep, exactly. Okay, we talked about the timing when that thing's going to come in. We're going to talk much more in depth on taxes. And just so you know, there's this reserve holdback. So the total sum amount may not come initially. The company and Alpa are going to make sure that any disputes are resolved before they fully release all that money. And that's just a liability consideration.
Andy, sorry, another question.
Yeah.
If they're over the 401k or near the 401k, should they stop contributing at this moment? Is there any way to game the system from now until time of payout?
Yeah, that's a good question.
I mean, I would say first
Yeah,
thing you do is you turn everything off. But FedEx pilots don't have the exact same 18%
no,
non-elective
it's
contribution.
9.
So most of them could probably put after-tax money in.
Well, the most you're going to get is
Yeah.
32.4. That's the 401A 17.
Yeah, 360 times the 9%.
Yeah.
So that's not there's no way they're going to go over the amount then. So
Unless they've been making after-tax contributions above and beyond about a little over 15,000, because that's the 401A 17 limit. So the 360 times 9, 32,400 plus the 24,500, that's 56,900. So you've got about 15,000 left in there. Let's just say if you just were doing pre-tax deferral or Roth, so that's the 402G, the 24,500, and you just were getting the 9% company contribution, those two things combined, I don't see
Yeah.
a scenario where you're gonna lose out on some of that 9% again, unless you were making after-tax contributions and really stuffing money in there. All right, so what do we really care about? If you were a captain the entire time during the amendable period, expected you'll make gross, right? And that's pardon the mouse writing here. It's important. 150,000. You were a first officer during that time period, 102. Remember, it's by bid periods. So if we go back to this calculation, so if you upgraded somewhere in here, it's going to be what you were during that bid period that determines that payout. So you probably won't make more than 150. I can very definitively say you won't. If you were first officer, the whole time you'll make 102, and somewhere in between if you upgraded during that time period. So that's the gross
Okay.
amount, right?
Yeah.
And then, so that's important to keep in mind because number one thing we want to talk about is taxes, right? That's the number one thing that's kind of an important thing to think about. We don't know. Maybe FedEx has put it out, just how they're going to withhold those taxes. Maybe I'll defer to the CPA in the house here on the tax side of the discussion here.
Yeah, so Andy, the pain is real when it comes to getting the bonus and having it be taxed. You think one
Yeah.
number, you saw the number on the other slide, the number that actually shows up on the paycheck. And I will say is almost always, I might even say always disappointing. So some of the airlines have done the aggregate method. They've ended up, being taxed at 30, 32, 35, 37, whatever the tax bracket was. And this is really important why we said the June 29th through September time period is so important that if
Hmm.
FedEx does the aggregate method, you might pay higher tax on that bonus check and see less of it in the check. But just be assured that all tax is the same. So if you end up withholding too much tax here and you are going to get a refund next year, that's great. If they withhold the 22%, you might owe. So I think that's the really important thing there. Don't forget about state taxes. Also, the union payment. I'm not going to call that a tax. Probably get in a lot of trouble, Andy. But the union payment as well. So all of these things will reduce the pay that actually is in the net of your pay stub. Anything else to add there, Andy?
No, I think that's just it. Yeah, I doubt they're going to use the percentage method just because very few pilots in and of themselves are in the 22. Most folks are even, young FOs are already in the 24.
That's
If
right.
they did, you definitely want to make sure you're withholding enough, right? Safe harbor type considerations. Even if that they use the aggregate method, meaning they just sort of treat that as part of your normal income, it's probably worth just looking at the tax projection and making sure you're going to hit the numbers for the year. We did a lot of tax projections back in 2024 with some of the
A
Southwest folks.
lot,
Yes,
hundreds.
to make sure that they were not going to get penalties at a minimum, and number two, make sure they weren't going to owe a big number in April of 2025 or the following year. So that's really important if you have a CPA or you work with a tax professional to connect with them just to make sure that you're not going to get surprised. Okay, well, we're financial planners here at Leading Edge Financial, so it's great to get the lump sum and the money. We want to talk about like what are some things to think about and how would you think about using it, and just some planning considerations, right? Because lots of opportunity here. Number one, we just talked about is plan for taxes. You got to make sure you got the tax piece. That means you're going to get less than 100, 150 or 102. We know that just off the bat. Uncle Sam and his 50 friends, depending on which one is yours, they're going to get their cut potentially. And then we just kind of go down the list, right? Like, hey, what are some really important things? Costly debts, right? So credit card debt, right? Maybe you've got a home equity line or a HELOC. We've seen those in the 6-7% type range. Auto loans that might be there. This is a great opportunity, I think, to knock down some of the debt. What do you think about the debt, Kevin?
Yeah, I mean, the most costly debt obviously is the highest interest rate. If you can pay some of that
Hmm.
down, you're getting that return. So if you have a
That's
7%
it.
interest payment that you could make, that's a 7% return there. So we definitely think that's a great place to go after taxes. But a lot of times, Andy, this comes into the emotional part, but it's also with the paying down debt is like, hey, this is the money I finally got. I don't want to just take
Hmm.
this money and
That's
pay all the
right.
debt off. So I know we also think that you need to have a little fun with this money too, and do something nice if you can kind of carve it out.
Yes.
But paying down debt, obviously a great thing.
Always good. If you bought a house in 2022 or something and you've got that, 2.25% loan, maybe not, but again, that's an emotional thing. Some people just love the opportunity of paying down debt. But Kevin's right. That's your return as you think about it. I'd say the other one is cash reserves, right? 3 to 6 months of emergency savings. So if that had been depleted or isn't quite where you want it to be, I would definitely encourage you to take a look at just putting some aside and get some decent high yield savings accounts. 3.5, 3.8%. Who knows what rates are going to do, but good opportunity just to save for the rainy day or the roof that turns the inside of your house into a rainy day. You've got that cash set aside. So that's kind of like, yeah, I would tackle those first. And then, think about retirement savings, right? So we already talked about the PRSP. If you haven't maxed that out year to date, at least the 24,500 opportunity to do that. For my friends who are 50 and up age wise, catch up contributions, 8,000 or 11,250, getting those into the 401k, and maybe some other opportunities. You're probably going to make too much for the direct Roth. What about backdoor Roth, HSAs? So pretty good savings, just opportunities if you're looking to sock money away for that side of the house. But what do you think, Kevin?
Yeah, I think, we always love financial planning, and that is something that came out of a lot of the retro bonuses. A lot of pilots
Yeah.
reached out to us and said, look, I've been kind of on automatic pilot all the last years, and this big sum of money has motivated us to really take a look at what we're doing. And obviously, that's the business that we're in. We have a benefit to mention it, but that it is a great time to just if you haven't planned before, to do some planning.
Hmm. And then I'll kind of lump the bottom, investing, revisiting your financial plan. And maybe I'll call this the fun part. You'd already alluded to it, Kevin, of our clients, right? We've got a plan. We say, hey, here are the levers you pull today. Here's the savings you need today. If maybe you've already hit that and you already have a great financial plan, that means you're going to hit retirement at 62, 65, what have you. Like, I'd say maybe this is an opportunity to just congratulate yourself and use the money and buy something, and go on that great vacation. Because I think that's important. That's important as well. Like I said, this is not a gift. This is hard-earned money. And you should be able to take advantage of that today. If the financial planning piece of it kind of aligns into that goal. Or maybe on the flip side, you've been a little bit behind on the savings for the retirement. This is a plug right here that you can look and say, hey, maybe I can make a larger after tax contribution, be in a brokerage account. We love those from a retirement savings perspective, and set that aside. So if you're working with a financial professional, these are great conversations to have, just to think about, like, how should I use this plan? I love when I can tell clients they can just, hey, just spend the money, enjoy it. You've earned it.
So, Andy, I think some of the biggest takeaways that I had, and I'll ask you for yours with pilots that had the retro bonuses in the past, is the first thing about your money in your brain. Jason Zweig wrote a book, and he actually looked at the chemicals in the brain when certain things happen to people. And one of the parts of the book is like when you're going to get a big sum of money, what ends up happening is that first you have the dopamine receptors get flooded and you get really excited. And then when you actually get the thing that you're so excited about getting, it's a letdown. And I will tell you, having worked in pharmaceutical organization for 18 years and then working as a planner, it seems like every single time someone gets a bonus, there's a letdown when the actual money
Hmm.
shows up in the bank. And so, and this is a dynamic. I think this is one of the gotchas that you need to be aware of, is that you, especially when you see it's 105,000 or 102,000, that's not what's coming into the account. And we often go over the pay stubs with people when they get this pay stub because they're
Hmm.
like, something's wrong. And it really does seem like something is wrong. So how can we deal with this issue of this dopamine that just fizzles out when it comes to the money coming in? I think you need to be aware of that because
Yeah,
it's
yeah,
going to be a letdown, Andy.
yeah.
What do you think?
No, just plan for it, right? We talked about it. Like you know you're not going to get the full amount. There's going to be some taxes that are going to come along with this. And just like you said, mentally preparing yourself for that, I think is step number one, just from a planning perspective.
Yeah. So, and the second thing that we learned is that when you're in the 30 something percent tax bracket, and also you live in a state that taxes, that's sometimes a huge chunk. If you haven't done your
Mm-hmm.
401k and maximized it, and some of the money, none of this money is going into the 401k directly. I don't think, Andy, is that right? Only the
You
9%.
you could defer your own, yeah, of course,
Oh,
but
so you could still
yeah,
defer it as well.
yeah,
So
yeah,
that's
it's
going to
income.
lower the amount as well. So I think the caution here is just know that this is all part of your compensation for the year. And it's really a terrific thing that you're getting this retro bonus. But again, that one paycheck is don't make it too high, don't make it too low. It's part of your compensation this year. And as Andy said, just know for the pension purposes, this might be one of your highest years, which will help with the pension.
Absolutely. Yeah.
So Andy, what other dynamics? I do want to talk about married couples, and I do
Go
want to
for it.
talk about
Yeah.
having pre-spent the money. What other dynamics do you want to talk about first?
No, I won't get in your way of the married couple discussion. Yeah.
Okay. Well, Andy and I are both married. Most of our teammates are married, and so there is a dynamic many times that one spouse says to the other, "Hey, honey, you really deserve XYZ," and I've deserved a lot in my life, and being deserving is not really a good thing when it comes to a big sum of money coming in. So, and then the other thing is the spouse says, "I deserve." Because we deserve is usually the way it comes out. I think, Andy, it really means I deserve, but we deserve to do whatever. And you do. So spend some money on the stuff that you deserve. Absolutely, spend some money on that. If you can put away even a percentage of it, Andy, I'm saying like put away 30 to 50% of the money after tax.
Hmm.
That's a great mission to have, and that's something that great because all of these emotional dynamics, family dynamics, spousal dynamics come into it. So,
Yeah.
anything else you'd like to add about being a married person, Andy?
No, no, I'll just say, we love working with airline pilot families, and hopefully this has been helpful for folks to cage the brain. And I'm sorry, you got one more?
Oh, the dynamic of having pre-spent it already.
Yeah.
This is probably the biggest potential gotcha because many people have already spent it, and when the pay actually comes into the account, you're just paying the credit card bill, or
Mhm.
or you've already known what you're going to do with it, and it really is a big letdown. So
Yeah.
anyway, I think that's the final emotional dynamic that I can think
Important.
of. Just remember that I shouldn't say just remember. That means I'm trying to tell you what to do. But I would just suggest that you just think about the year 2026 as a year when your pay went up 40%, you got your retro bonus. These things are all positive. And again, it gives you a greater opportunity, a bigger shovel, as one of our partners says, Andy, a bigger shovel to fill up
Yeah.
those accounts that you want to save for the future with. What are your final thoughts, Andy?
No, I think you hit the nail on the head, Kevin, on everything. And no, I'd just say that we love working with our airline pilot families here at Leading Edge. If there's anything we can do to help, as this is the easy part, but this is the easier part. Coming next year, there's gonna be big decisions that need to get made about the pension and what options you're going to look into, whether that's the enhanced PRSP or the market-based cash balance plan to the extent that that thing even gets approved. So big decisions coming down the line for our FedEx pilots. We love to help our airline pilot families. So if there's anything we can do, please reach out. It's Kevin at leadingedgeplanning.com and Andrew at leadingedgeplanning.com. Feel free to shoot us an email, check us out on the website, and we'd love to help.
Yeah, and Andy, most financial professionals will offer a free hour. We are a Zoom company. We absolutely will offer a free hour. What we try to do with that free hour is just really get into the things that are bothering the family or things that the family wants to achieve. Then at the end of that hour, you can go your separate way for sure. So anyway, thanks so much for watching, everybody. Kevin and Andy with Leading Edge. Take care.
Leading Edge Financial Planning LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.